So Gloria, I'm going to switch to you now around digital assets. So starting with you, how do you see them becoming more mainstream, and how quickly do you think we need to focus on that?
Let me start with the second part of your question with respect to how quickly we need to focus on that. I think what's really interesting is we're seeing transformation of our industry across a multitude of different places, digital assets being one of them. And I think that we do need to be thinking that this has the ability to really change the way that we think about our own operations and how we support digital assets pretty quickly. You know, we've seen, even through some of the work that we're doing at DTCC and the Great Collateral Experiment, the ability for this to be very real very quickly to the industry. Deb, I will say one of the things that you said, and I think it's really key when we think about digital assets as operations leaders, is how do we think about, like you said, not building necessarily a digital assets organization that is distinct from our core operations. There needs to be this interoperability. There is a need for us to bring these together so that we can really service them as one on a go-forward basis. But that means not just the technology platform, the people as well. We need to be thinking about that in terms of building out our operating model.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. As you all heard directly from a DTCC representative, we need to be thinking about the digital asset transformation and how this has the ability to transform the industry and be real very quickly. In today's video breakdown, I'm going to be playing some video clips of some high-end industry-leading experts from some of the world's largest organizations like the DTCC and other major financial institutions confirming that we are on the precipice of something exponential. Now is not the time for distractions. Now is the time to block out the noise, focus on accumulating blue chip digital assets, and having a long-term perspective. So I'm going to start here in today's video breakdown where I said we are living through a pivotal moment in history. Crypto fundamentals have never looked stronger. What do I mean by this? Here's a post that I put out to you guys just a couple of days ago on June 9th where I said, the DTCC processes $2.5 quadrillion annually, and the future is on chain. The DTCC is redefining capital markets by transitioning from legacy infrastructure to blockchain-powered futures. $2.5 quadrillion in transaction process in just 1 year. That's the scale of transformation that we are witnessing. Off-chain to on-chain, from currencies, commodities, and carbon credits to art and real estate. Tokenized assets are now paving the way for global blockchain-based trade. And the DTCC is not just experimenting, they are executing. This is just the beginning of a multi-quadrillion dollar tokenized era. Before I play a video breakdown of another industry-leading expert from the DTCC, here we have a Navigating Change in Technology Operations panel discussion that took place on June 3rd, 2025. And here is this representative, the Managing Director and Head of Enterprise Services at the DTCC, Gloria Leo. And one key takeaway from this report, she goes on to say, at the DTCC, we are deeply involved in modernizing efforts aimed at supporting the industry's need for resilience and readiness. The integration of AI, digital assets, and real-time analytics are not mere buzzwords. They possess potential to revolutionize our industry. So we're at a very pivotal moment, ladies and gentlemen, and it would behoove you guys to continue to do research on digital asset projects, blue chip assets that are going to revolutionize not only tokenization of real world assets, but the financial ecosystem as a whole, right? And so heading over here, just to show you guys that this is not some smoke and mirrors, they're now at the point where they're physically telling us that this is going to happen. It is going to happen a lot faster than most people think. I'm going to play 2 video breakdowns from an institutional panel that took place just a couple of weeks ago. This video is fresh from just 3 weeks ago. Listen to these 2 video breakdowns back to back.
It's working with blockchain and crypto to how you're kind of managing different projects, initiatives at your institutions today. Maybe Dan, I'll let you dive in.
Well, it's actually interesting to see how this conference has evolved over the years. First of all, the clothing is a little bit different. 10 years ago, it was a pretty wild attire from the conference.
No capes this year that I've seen it.
I haven't seen any either. I'm kind of disappointed. I was hoping for a couple. But that also reflects the kinds of investment opportunities and the crowd in general. It used to be that 5 to 10 years ago, it was what kind of wild investment opportunity was it? You could invest in race cars, you could invest in sports teams, you could invest in your own island if you wanted to. These were interesting for sure, but not projects backed with a real investment thesis. And that's fundamentally different today. So, just this example with real world assets, this is now a very real disruptive force to traditional finance. And for example, in our case, our focus right now is bringing $100 trillion worth of assets that DTCC is responsible for on-chain. Many folks here may not know who DTCC is and what we're responsible for. We're the principal record keeper for the U.S. financial markets. So we are all publicly traded securities. We hold a principal record keeping role. We're responsible for T+1 settlement. We're owned by the major banks and institutions. So effectively, we're a DAO for the U.S. financial markets. We're determined T+1 settlement is not good enough. We're really looking to take advantage of real-time settlement from blockchain rails. And it's our responsibility to bring those assets into the market.
We are trying to take advantage of T+0 settlement on blockchain rails. And our goal at the DTCC is to bring $100 trillion of assets on chain. That is a massive statement. And the crazy part is he finishes this off by saying that we are a lot closer than most people think.
And that's what I think the FMIs like DTCC have a big role to play. And I'm excited to see and hear about.
Yeah, no, similar. And I mean, I look at the technology, it's there. Like, we have the technology to do all of this. So no pressure, Dan, but I'm not going to ask for what you think a timeline is for some of these standards to get deployed, but just from your purview and see, what would you say are sort of the steps to getting towards even just a standard within the US market, but then how does that then expand globally? And who are the key players outside of the US and DTCC that you think need to be involved in that?
Well, I do think one of the fundamental barriers to getting to that state where we're able to operate in a global financial ecosystem efficiently, and I don't think that's far away. I actually think it's much closer than many people realize. And I'm expecting next year to have that be the centerpiece of the tone of this conference is, look, we're finally there.
Now, I know that a lot of people are tired of hearing that we're close, we're almost there, this, and that. But like I said, crypto fundamentals have never looked stronger. We are seeing a profound shift in regulatory tone and a surge in institutional interest that is reshaping the landscape.
So we were talking yesterday and outside about this kind of convergence between the institutional world and the retail world kind of coming together finally. How do you see that happening?
I mean, I think it's going to be one of those classic examples of, the technological S-curve where it'll feel like nothing's happening and then all of a sudden it happens all at once. And I think we're going to see right now a lot of traditional financial institutions are increasingly more and more interested in Bitcoin and Ethereum and other digitally native asset exposure, just because a lot of the on-chain lending rates are much higher on-chain than off-chain. So that'll be like a lot of the catalyst for TradFi institutions to jump in. And then I think a lot of the time they'll see that the underlying technology really has matured to a point where it can be utilized for RWAs. And so that transition from crypto native products to RWAs, I think, we're in the early stages of it, and it'll rapidly speed up when we get regulatory clarity over the next 18 months or so.
So as that gentleman mentioned, right, it'll be very slow and gradual and then sudden and all at once. And so that is exactly what I'm trying to get you guys to see. We have the gentleman on stage from the DTCC mentioning that we are almost there. Within the next year, he sees all of this happening and unfolding at a very rapid pace. You have the gentleman on stage saying the same exact thing from a tokenization event that took place just a few days ago. So I said here in this post, it may only take one strong risk-on headline to ignite a major breakout. That is where we are standing at right now in this crypto ecosystem. Okay. And so real fast, I want to take you all over here to this definition, the definition and meaning in the market of a tailwind. Market tailwinds refer to a positive market condition or an event that provides a favorable condition for growth, profitability, and investment. And then I want to take you back here to this gentleman here speaking. Listen to what he says about how regulations are coming, and we are going to see some form of a regulatory tailwind.
Yeah, that's a great question. I think the crypto-backed ETFs last year really proved that there's a great fit for retail with those products. They offer convenience, access, and they offer the regulatory compliance infrastructure that's needed, and they meet retail where they are behavior-wise, right? So if you consider retail, what they're currently doing, people go onto their self-directed brokerage accounts, they trade in their IRAs, their tax advantage accounts. The ETFs made it possible to access crypto within those accounts that they basically are used to using. So those direct-to-consumer platforms, those tax advantage brokerage accounts, that's really the channel to access retail most efficiently, and the ETFs have been able to do that. So I think for this space, for the RWA tokenization space to really evolve and really scale, to Thomas's point, I think a lot of the rules need to change, which is kind of already in progress. There's clarity coming. There's the Genius Act on the stablecoin side that's in the works now. But also there's going to be a bunch of other regulatory sort of tailwinds.
So to finish this all off, I said here, yes, we are still experiencing intraday volatility driven by tariffs and geopolitical tensions, but this should be welcomed, not feared. These pullbacks are opportunities to accumulate high conviction blue chip digital assets at a discount. And I tagged a few of those down here at the bottom, like XLM, XRP, HBAR, XDC, Quant, Say, XLR, AVAX, Flare, Algo, Ondo. Now, those are not all the assets that I hold in my portfolio, just a few I think people should be paying attention to this next massive leg up. These pullbacks are opportunities to accumulate high conviction blue chip digital assets at a discount. Those who recognize what is happening now and position themselves accordingly will likely look back in a few months with confidence that they played it right. That's not to say that the downside is irrelevant. Drawdowns and corrections are a part of this journey, something that we all have to take into consideration. But zoom out. The broader trend is building toward a powerful wave of liquidity expected to flow in over the next 6 to 12 months. By next summer, many will be glad that they stayed focused and made smart decisions when it mattered most, right? So with all of this in mind, I'm going to play this last video clip of this gentleman here mentioning that institutions are about to jump off of the sidelines and actually onboard into the space. I will leave you guys here with this video breakdown today. As always, just bringing you all some of the realest information. All of these video breakdowns that I'm sharing with you guys today have hardly any views. This one in particular has 46 views, which just goes to show and prove my point that the masses are distracted. Most people are not participating in this space because their brains are mush. They're being turned into mush by mainstream media distractions, and it would behoove you guys right now in this pivotal moment in history to block out the noise and focus on what matters. So if you all enjoyed today's video breakdown and you want to continue to see real research in this game, institutional insights, documented research, then make sure that you guys are subscribed to the CYPRX YouTube. And as always, many blessings to you guys. Do me a favor, smash that thumbs up button. It does go a long way and helps boost the algorithm. Keep in mind that in the future, if any of my video breakdowns seem AI automated, it is not my fault. It is something that YouTube is having an issue with on the back end, and I will make sure to take time to fix it. But with that being said, I'll leave you guys here with this last bullish fundamental video breakdown from an institutional representative talking about how institutions are about to come off of the sidelines.
Yeah, I mean, I think just at a very high level, just the level of the conversations that we've had even a year ago versus today are the delta is wide, right? Like Galaxy's fortunately very well positioned to be able to kind of straddle both TradFi and crypto, and the conversations even a year ago were more us being more outbound with different partners, and now the conversation has very much flipped where we're now working with a lot of different players just because of the coming regulatory clarity, where more and more of the traditional financial institutions are really interested in this technology, and they look at it as more as inevitable. And so the question is how they jump in and what strategies they are going to use for not only day one, but longer term in a decade. And so that some of that regulatory kind of clarity is in some ways priced in, especially with, I think, stablecoins. People very much see that bill passing relatively soon this year, which I think could be material for stablecoins specifically. But also it means that momentum will likely continue to increase for the market infrastructure bill more broadly. I think DC is DC, so there's always a big asterisk there, but I think getting that level of clarity can really be more material, and it means that a lot of the players that historically have understandably been hesitant because there were a lot of unknowns are now coming off of the sidelines and are really excited to engage in ways that we haven't seen previously. There were a lot of unknowns are now coming off of the sidelines and are really excited to engage in ways that we haven't seen previously.